Good evening, everyone. Welcome to the extended SPY report tonight for Monday. That would be May the 20th. Monday, May the 20th. I want to bring back into focus an old ABCD pattern that I had up here in the past. Some of you might remember it, some of you might not, but it's important for us to take a look at it in conjunction with what it is that's going on. Now, so far, things look still positive. The Nikkei is up. Everything's rosy. But as we come into this space right here, we can see that there are a few telltale signs that we may be coming in to take a breath. Now, first of all, there's nothing showing rollover yet. I need to show this to you. SMI's sitting cleanly in the trending zone. It is moving up, moving very, very nicely. Any kind of rotations that occur in this range, not telling us anything about a rollover, and that's true. Figure the phone wouldn't ring at 10:37 or 10:30, whenever it did ring. Sorry about that. So here's what we are looking at. Nothing looks like it's rolling over. Everything is holding its lines very nicely. Really, really important for us to realize that. That being said, a lot of these formations are coming into the extended spaces. You know what we are to believe about R4. And of course, here we do normally stop anywhere between R2 and R3 on a day that, or S2 and S3 on a day that we are trending. Now this wave has, let's see if we can get the pieces showing up here. Well, we won't look at that for some reason. That's not behaving properly. But as we look at this, perhaps this is an ABCD inside of another ABCD. So let's take a look at that together. This is motive wave, and motive wave is really great about giving us pre-built formations that we can copy and use. This one's just a little shy. Ooh, that's a completed ABCD right there. Just a little bit shy of the C. If indeed we use an extended ABCD, which gives us flexibility on the BC pullback, looks like there's a little bit more room to run right there. Looks like it's a little bit over the midline. Now, like I said, the Nikkei is running. Things look great. China looks great. Everybody's happy. Punch drunk, buying stocks. What are we supposed to do? Listen, all we're going to do is follow the price action. If we speculate, contemplate, pontificate, not going to lead to anything but probably a lot of exasperation. So all we're going to do is follow the signals. And here's what the signals are going to look like. If we hold the low coming into the morning, we are going to move up into this region and very likely into the 167.87 area. This could extend all the way up to 169.51. All right, it is colliding with this bigger pattern. We've got an overlap all the way up here into 168.69. All right, now that tells us, hey, listen, we've got some upside momentum sitting there. Still looks really good. Let's go to the 1 hour chart and see what we see about the breakout spaces, and let's talk a little bit about what's going on here. We did close above R2. If we close above R2 and look at this, inflection again, up in the zones that look good. The DPO in a little bit of flat action. We like seeing it up here. Movements up here are very, very healthy. But as it drops down into here, it gets a little bit weaker in terms of momentum. All right? And so what we are considering is the following. Two things can happen. Well, three things actually. We could open flat, at which point we want to look for it to hold this level. If it holds this level, it's going to go to R3. 167.45-ish. And then probably going to hit this 167.87 area. Remember to look at your pivots. If you like to use classic pivots, you can see tomorrow's pivots already by putting them up in your own charts. The second thing we could do is gap up. All right? So if we gap up into this area, I beg of you, please do not buy at the open of a gap when everything is hyperextended. Gaps have a tendency to fill day by day. Gaps have a tendency to fill at least 50% of their gap, right? 38.2 if the gap is in real expansion, and then if it's just some sort of breakaway, it is not going to fill it. But the breakaway event is the outlier. And the problem that we have as traders is we have a tendency to give more weight to an outlier than we should. We should be looking at what's expected. What do we expect to see, not what we hope to see. All right? So we can see honestly by this range of motion here that we do have a bit of flattening action. And then we've got this, all of a sudden, this nice little burst to the upside here. We could see this building on Friday. Amazing, truly astounding what's going on in the market space right now. But we're not going to fight it. You know, I just heard from a friend of mine. He said, yeah, a good buddy of mine, he's just piling in short. I'm like, whatever. You know, listen, the market is going to roll. But you have to understand something. If we've got a shift in a mental paradigm, the first place it's going to show up is in the charts. And see, there are two kinds of folks that normally look at a chart. There's those of us, mostly everyone, who sits and looks at a chart and says, all right, you know what, this is all the way up here. It's got to roll. So, you know what, I'm going to step in a little bit because this is at where it is that it's supposed to roll. So I'm expecting that it does this next thing. And so I'm going to get in. Right? Now, I will say that's most of us because most of us really want to catch tops and bottoms. We just want to feel the exhilaration of that, wow, I did it, look at what I did, and so on and so forth. And then there are a few other folks that say, hey, listen, I understand what we've got going on here, but the way the market works is it takes as few people as possible with it. Every time, no matter what, the market takes as few people to the top or as few people to the bottom as it possibly can, in terms of saying, hey, listen, you've got the best trade, you're going to be in with everybody else. And everyone primarily is waiting for the market to drop. Now, if everybody's waiting for the market to drop, people are piling in short, the stops are getting run, and it's continuing to move higher. Do you understand the natural notion of saying, hey, the market's going to drop? People stepping in front of it is actually creating the opposite result. And so if you think about that, that's really actually natural for the market. That's why most of us don't make money. And most of us definitely don't make money consistently, is because our brains are not geared to shift when things need to be shifted. We continually go, you know what, the market's got to roll. Listen, the market does have to roll, but I'm not going to step in front of a freight train. And that's exactly what this is. If you're stepping in front of a short, listen, you're probably going to be right. But when is the operative question. And if it runs another 15% before you're actually right, how solvent are you actually going to be at that particular time if you've decided to short now as opposed to whenever? Okay? So that's all I want to say to you. And here's what we're looking at. If we clean this up just a little bit and move it to its points, we're going to see the same kind of target in essence. But look at this right here. This is a breakout formation, right? Here's the test, here's the pullback, here's the retest, a hold of the level, another pullback, a retest, holding the edge, and then a pop right out of the top. That is a breakout formation. Now, in a breakout formation, we have a tendency to pull back and then pop to the upside if it is a breakout that's going to hold. If it is a failed breakout, it's going to come down and test these regions. Now, where is it going to test? Probably right here. Notice this is a gap that has yet to be filled. We have several gaps in the SPY that have not been filled yet. And that's really, really important for us to consider. So the actual trade event will be the following. If we gap up, expect a fade. Expect a fade. Now, we gapped up on Friday. The fade right here was very mild, right? It was so mild that it just came into its pivot and moved forward. Could be the same thing that happens here. Watch the gap up. It will fade. So if you take it out of the gate and it presses upward, realize the 945 reversal is probably going to get you. Okay? So if you take it on the breakout and you ride it upwards, higher low, higher high, higher low, higher high, you're in great shape. Everything here says that you've got good upside momentum. The problem is that kind of momentum does not expand infinitely. It just does not do it. It exhausts, and that means it's going to have that pullback. If it pulls back into this R3 region, 167.47, and barrels forward, you can take the trade long, just so long as these guys aren't rolling over and looking really tragic. You can take the trade long and ease yourself up. This is not a space to be full-sized. Now, in hindsight, I've been saying this for a long time. Hey, listen, this is not the space to be full size. Frankly, you could have leveraged everything on 10x margin and you'd be in great shape because the market's done nothing but roll to the sky. But see, that's playing with way too much risk in a space where easily just the littlest thing can shake this market off its core. And so we have to be very, very careful about managing the risk events that could be outlier, but then again, they could be just regular things that we're thinking about. So you've got to pay attention to those risk events, and that's why I'm saying, hey, listen, not the place to be big-sized, and certainly you don't want to give your charts a lot of room to jockey, especially if you're day trading. All right, the next thing that could happen is that we could gap down from right here, which I think is probably unlikely unless there's some news coming out of Europe that changes the winds. But we could pull back here. If it bounces off of this breakout level, folks, it's going to be a long. Now, how far will it be along? Probably into R2, 166.91 off of the 166.20-ish area, right? That would be a nice little trade. But again, what you just have to do is realize that whether it gaps up or down, those gaps are going to try to fill, and you're going to look at the 50% mark easily for it to try to come into. And if it holds, you know you're in good shape. It can move right back to the upside. If it pops up and then begins to fade, you know it's going to come down into the base of the pivot, the prior day's pivot, or the gap. Remember, when a chart is meandering like this, it has a tendency to test the prior day's pivot. Tomorrow, this will be the prior day's pivot. All right, spent a lot of time in SPY. Let's just go through cues very quickly again. Here's the thing about the cues, it's forming the same kind of extended ABCD pattern. Now, frankly, there's a lot of subjectivity in here. I could have shifted this over to here and watched the projection upward. All roads point to the north at this juncture, folks. I'm telling you, there's a lot of upside momentum sitting in these charts, and really a big fat rollover looks like it's the furthest thing from reality that we are looking at in here. The propulsion to the upside is just crazy. Look at the volume. Everybody's talking about, oh, you know, the volume's light, whatever. It's been consistent as the charts have moved up. It has not dampened significantly. It's just holding its own. Now, in hindsight, it's much less than this volume, but we already know that. We're skittish here anyway. That's why we're saying, hey, keep your size a little bit small. Notice the same sort of formations in the trending zone. In the trending zone, the DPO is the only thing that's flattening out a little bit, and you can tell that by overall price movement. Let's expand this picture so you can see it. From the 4-hour chart, we can see small movements with large retracements. That's what's been happening, large retracements, small movements, and that's what makes the DPO do that. All right, let's take a look at the 1-hour chart and see if we can pull together what we need to take a look at for tomorrow. Again, a test of R2, it closed right at it, right? Right at it, sitting right there. What is that? High, low, close. 74.30, yeah, right on resistance level 2. What's the likely move? Hey, you know, could have the same kind of embedded ABCD. Let's do that. Let's try a standard ABCD, and we will use this wick up here and this wave down here. Ooh, that works nicely. Right there. Look at that. Also projecting upside, just like SPY did, a little bit higher. Hey, if it gaps into this region, right, don't expect it to propel to the upside right away. Now, what it could do is just come in here and then move upward, because realize if we're looking at this in the gray area, it does have room to run. So let's look at the scenarios. It could pull back, right? Gap down. If it gaps down, it probably will move into the 74.10-ish area. If it holds 74.10, you can buy the 74 calls and watch it go into 74.30 and then 74.40. All right, that's very, very natural. Make sure that your technical indicators continue to point upside, giving you a chance to see what's going on. Hang on. Why is this not paying attention? All right. Giving you a chance to see what's actually going on with the charts. Okay? Notice the expansion away from the weekly VWAP. And so that also is giving us a little bit of a suction event. But again, take a look. A little bit sloppier in terms of formation, but this is a breakout event. The ideal space for the real breakout looks like it's right about here above that 74.10. So if it comes in and holds 74.10, it's going to be along. Where would your stop need to be? Right around here. That candlestick that breaks the level moves to the upside. All right, so that's exactly what we would be looking at for the cues. If it fades, it's got to lose this level. If it loses 74, looks like it's got easily this congestion event right here, 73.89. And then the prior day's pivot, 73.74. Is it reasonable that we test the prior day's pivot? Well, we're not looking at really big slope here, so I would say yes, right? And this feels like it's actually in a space where it could fill the gap. Now, if you want to make yourself a little bit more granular, you can take this wave right here that it's moved up to and do a 61.8 retracement event down into this level. It probably will be right around here. If it holds, you know there's more upside. Again, charts still point to the upside, so remember all the things I've been telling you about. This one's very interesting. Let's take a look at the IWM. I have two formations here. One, an alternate ABCD pattern. Two, a crab, sorry. Yes, this is a crab pattern. Here's why I have both of these guys sitting up here. I have both of these guys sitting up here because, actually I'm going to put that right there. I have both of these sitting up here because they have the relative same target regions, right? 99.43, and then all of these guys are converging on the right spaces at 97.99, which is where we popped out from. Notice a lot of sideways action at that breakout event. Now we're popping into the space and we've got new regions, and here we are up here. Now let's do it one more time. Remember, the market is fractal, so that means waves sit within waves, and it took me a long time in my trading career to learn how to make money expanding on these fractal events, right? And it really is a matter of looking at things in terms of term, right? How long is that going to last, and so on and so forth. Let's use a standard ABCD because that just might do the trick here. Yep. And what do you know? Also something that's terminating up in this region. Again, what could we do? We could gap up because of what we've got going on in across the pond and over in the east, right? So we have upside momentum, very likely based on what the pre-markets are doing. We could have a gap up into this event. Remember, that gap up should fade. If, however, you come into the morning and see higher highs and higher lows and you want to take that trade, by all means take it. Just realize that the 945 reversal candle is very likely to come and get you. Okay? Not a problem. But here it is. A big extended ABCD pattern at 99.43. A small ABCD pattern at 99.27. And then R3 at 99.28. The midline of R3 at 99.71, and then R4 at 113. We know that we rarely pop into R4 and hold, right? Now this is not going to be tomorrow's R4 because we did have pretty solid extension. We're going to have ourselves a little bit of a wider price pattern. This might end up being R2 on the day. But again, if it breaks the levels, you must think about taking the trade, right? Go to a smaller time frame. If the candlestick confirms, you know you've got upside momentum, and those are the levels. All right? If it breaks down, this is going to be the support region. 98.62. If it loses 98.62, it's going to come down here into this 98.38. And then likely attempt to fill the gap. Now this gap is pretty good sized, but it also happens to be sitting right. The edge of this gap is sitting right at the target region of this extended crab, right? So if it's sitting here, there's a lot of suction that says, hey, you know what, I ought to test this. I ought to see what's going on here. So, very, very likely, see how far away we are from the weekly VWAP. Notice what happens when we get that far. Here we are really far away from it again. We pull in to see it, right? We happen to pull in to see the VWAP when it does that. Okay? So my thought is if it gaps up, it's going to fill the gap. I'll be looking to take these trades with confirming candlesticks, right? We'll see how they go. You can use a 5-minute candlestick to confirm just so long as your 15-minute technical indicators and your 5-minute technical indicators are telling you that you're going in the right direction. All right, pretty long, but you know, Monday's SPY reports normally are. They're normally much longer than the rest of the week, but they give us a great big view of what's going to happen. And that's it. Good luck trading.